In this video we are going to talk about 20 dividend stocks to buy. So before starting, please like this video and subscribe to this channel for our future updates. Undefined high yield stock. This stock has a higher dividend yield than the S&P 500 or the 10-year US Treasury note. The 10-year dividend yield on the S&P 500 was between 1.25 and 1.75% in 2021. Any dividend over such levels is high yield. Also, don't buy a stock for its dividend yield. It should be a financially sound company with visible development prospects. So here are 20 high-yield dividend stocks. Number 20. W.P. Carey. W.P. Carey is a real estate investment trust (REIT) that holds a diverse real estate portfolio. Since its initial public offering in 1998, the company has increased its dividend payout every year. W.P. Carey's capacity to continually build its portfolio of cash-flowing commercial real estate has been the driving force behind its constant growth. Thanks to its strong financial profile, the REIT has the financial freedom to continue developing in the next few years. Number 19. Walgreens Boots Alliance. Walgreens has been paying dividends for over 88 years, increasing its payout in each of the last 46, earning it the title of Dividend Aristocrat. The company's ability to constantly boost its store count, which reached more than 21,000 globally in 2021, has fueled that steady expansion. With the demand for healthcare only expected to grow in the next few years, Walgreens should be able to expand its operations and dividend in the years ahead. Number 18. Verizon Communications. Over the years, telecommunications behemoth Verizon has proven to be a great income investment. In 2021, the corporation raised its dividend for the 14th year in a row. While it invests in transitioning its mobile network to 5G, which will provide users with faster internet speeds, Verizon should be able to maintain dividend growth. Number 17. Realty Income. Realty Income is as advertised. The REIT has paid its monthly dividend for over 600 months. Even better, it has increased its payments over 100 times since its IPO in 1994, at a compound annual rate of over 4%. That's over 25 years. Making it a dividend aristocrat. Acquisitions have been fueling that rise. In 2021, Realty Income will merge with Verizon NYSE (Ver) to form a $50 billion real estate juggernaut. This contract allows it to expand. Number 16. Procter Gamble. Procter Gamble, the world's largest consumer goods company, has increased its dividend for 65 consecutive years, earning it the title of Dividend King. That steady ascent appears to be set to continue. The company has a proven track record of boosting sales by purchasing and developing name-brand household products that fulfill the needs of consumers. Number 15. Pfizer. Pfizer has paid dividends for 330 quarters. In November 2020, Upjohn will be spun off and merged with Mylan, forming a new company called Viatris, Nasdaq, VTRS. As a result of its good financial success, Pfizer decided to keep the present high-yielding payout. With most beneficiaries needing a third booster shot and maybe annual boosters after that, Pfizer should have enough cash to finance future dividends. Number 14. 3M. 3M has been a fantastic dividend payer. For more than a century, the industrial company has paid dividends, with payouts increasing in each of the last 63 years. As a result, it's a dividend king. The company's approach of investing in new items, which has increased sales and allowed it to keep boosting its dividend, has been the driving force behind that continuous rise. Number 13. Medical Properties Trust. Medical Properties Trust is a real estate investment trust (REIT) that owns hospitals. The corporation buys hospitals from healthcare providers and then leases them back to them. This strategy has allowed it to steadily grow its portfolio, cash flow, and dividend, with the latter increasing at a 5% compound annual rate over the last 8 years. Medical Buildings has a huge opportunity to buy more hospital properties, which should help the company maintain its dividend growth. Number 12. Johnson & Johnson. Johnson & Johnson, the healthcare behemoth, has grown its dividend for nearly 60 years, making it a dividend king. By constantly producing innovative medicines that help enhance world health, the company has regularly paid an attractive and growing dividend. One of its most recent achievements is the only licensed single-shot vaccine against COVID-19. Because of the company's ability to play a leading role in improving health outcomes, its sales and dividends should continue to grow. Number 11. Intel. Over the years, technology behemoth Intel has continuously boosted its dividend. While the chipmaker hasn't increased its payout every year, it has increased it for the majority of the 27 years since it began paying out dividends. The corporation generates a large amount of cash, allowing it to grow its operations while also returning billions to owners through share repurchases and dividends. Number 10. Gilead Sciences. Gilead Sciences pays one of the best payouts in biotech. Since 2015, the corporation has increased its dividend payout every year. The biotech's HIV franchise is strong. But Gilead has benefited from its antiviral remdesivir, one of the few licensed medicines for COVID-19. It has numerous potential medications in the pipeline that should boost future sales. Number 9. Enterprise Products Partners. Enterprise Products Partners is a major operator in midstream oil and gas. The MLP has been growing its payment for over 20 years. To seek potential in the energy transition, the corporation launched an evolutionary technology group in 2021. Those future investments should allow Enterprise to raise its dividend. Number 8. Enbridge. Enbridge, the Canadian oil pipeline behemoth, has been a great dividend stock. It has increased dividends for over 66 years, increasing them by 10% compounded annually for the last 26 years. Enbridge is adapting by investing in infrastructure to support natural gas projects and offshore wind farms. These investments should enhance cash flow per share by 5% to 7% per year through 2023, supporting dividend increases. Number 7. Digital Realty. Digital Realty is a real estate investment trust, REIT, that specializes in data center management. The corporation has a long history of paying out dividends. It has increased its dividend for the past 16 years at a rate of 10% per year on average. Given the need for new infrastructure to serve the enormous growth of data around the world, this increasing trend should continue. Number 6. Crown Castle International. Crown Castle is a real estate investment trust, REIT, that owns communications infrastructure in the United States, such as cell towers, tiny cells, and fiber optic cable. This infrastructure is critical for the telecom industry's next-generation network, known as 5G. Crown Castle sees a long-term opportunity to invest in new 5G-related infrastructure, which should enable annual dividend growth of 7% to 8%. Number 5. Consolidated Edison. Consolidated Edison, CONED, is a New York-based electric and gas utility. As a developer of solar energy, it ranks second. CONED has a solid dividend history. Dividend Aristocrat has increased its payout for 46 years in a row, the longest streak of any S&P 500 utility. That trend is unlikely to change soon, given the company's ongoing investment in new technologies, particularly renewable energy, as the U.S. economy shifts to greener energy sources. Number 4. Brookfield Renewable. Brookfield Renewable is a Brookfield Infrastructure subsidiary, NYSE BAM. Energy storage, hydroelectric, wind, and solar are all areas of concentration for this Brookfield firm. Brookfield's high-yield dividend is backed by continuous cash flow through long-term power purchase agreements with utilities and other end users. Long-term, the company intends to raise its dividend by 5% to 9% per year, fueled by organic growth, including a large pipeline of new renewable energy development projects and acquisitions. Number 3. Brookfield Infrastructure. Brookfield Infrastructure owns and runs operations in utilities, transportation, energy midstream, and data. Businesses with solid cash flow sustain the dividend. Brookfield expects to boost its dividend by 5 to 9% annually over time, fueled by organic growth and acquisitions. It bought a controlling stake in Inter Pipeline Limited in August 2021, which could help it develop for several years. Number 2. AvalonBay Communities. As one of the country's leading apartment owners, AvalonBay relies on continuous rental income to fund its high return. The REIT's strong financial position allows it to continue building and acquiring additional residential projects. Since its IPO in 1994, AvalonBay has boosted its dividend by 5% annually. With rising residential demand, this REIT should be able to keep growing its payout. Number 1. AbbVie. Since its 2013 split from Abbott Labs, NYSE, ABT, AbbVie has paid out great dividends. AbbVie has boosted its dividend payout by 225% since its inception, continuing Abbott's dividend growth record. Both firms are dividend aristocrats, which means they have increased dividends for at least 25 years. Although AbbVie's top-selling medicine, Humira, will lose its patent protection in 2023, the rest of its pipeline and the 2020 conclusion of its transformative acquisition of Allergan, NYSE, AGN, ensure a steady stream of dividend income. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.